You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune can mean one of two things. It's either Monday or it's Thursday. And guess what? It's Thursday. It's noon Central, 1 p.m. Eastern. It is time for the old OB, a.k.a. your favorite source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you're listening to this program right now. Make sure, however you listen, you head on in there, leave a review on your platform of choice so new people can continue to discover the network in these trying times. And, of course, if you have questions, and many of you do, keep them coming. We love to hear from you. We're working to get as many answered as we possibly can on all of our various shows, not just the Option Block, but on TWIFO, we did a question and answer palooza last week. We did a huddle on OPR recently. Boot camp's been, half of the episodes have been your questions, so we're doing our darndest to make sure all your Qs are answered out there. Keep them coming. We do love to hear from you guys. And joining me on the old program today, first off, he's ever complaining, ever taking umbrage. Yes, once again, we are joined by the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Line Capital, a.k.a. the OG of social distancing. He was doing it way before it was cool, way before it was the thing to do across these fine United States. From the GIOVINAZZI compound on the shores of Maine. Mr. Rock Lobster, welcome back to the program. Does it feel good to have been a societal leader in this respect, sir?
It does feel good. However, I would like the rest of the world no longer has to follow me. They can all go back and do their thing, enjoy life. And I, of course, will stay my grumpy old self on the coast of Maine. So I will not change, but I hope everybody reverts back to their prior selves.
So what you're saying is, get off my lawn, get out of Maine. I don't want you city dwellers coming up, knocking on the door of my compound anymore. Get out of here. I want to go back to the old days where all I had to worry about was clam piracy. It sounds like that to me in code is what you were just saying there. So get off Andrew's lawn as we keep on moving out into the hinterlands of Chicago, where we are joined once again by a guy who never says get off my lawn. He's far too polite for that. He probably has a much nicer way to say it. He is Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. To you as well.
You guys are welcome on my lawn at any time. I mean, after all, I had the guys from Commonwealth Edison there chopping trees yesterday. So if my lawn's good enough for ComEd, then our listeners are welcome on my lawn as well.
Here you go, listeners. You can hang out if you need to social distance, but to get the heck out of Dodge, Uncle Mike's lawn in the hinterlands of Chicago is open to you. Just unfortunately, what is not open to you is the delicious Skippy Zeros and lemonade down the street from him. So if you can, maybe they'll do takeout. So if you can, patronize them anyway. Keep them rolling. One of the unsung, unheralded victims in all of this madness out here. And joining us once again, doing a bit of double duty here, holding down the TradeStation hot seat today on the program, Mr. Andrew Rocco, a.k.a. the Educational Content Strategy Manager over there in TradeStation land, Mr. Andrew 2.0. Welcome back to the program to you, sir.
Hey, Mark. Great to be here. I was actually just scrolling through some of my old iPhone pictures, and I saw a photo from a few weeks ago when the NASDAQ was down 12.3%. So I just thought that was funny how quickly things have changed. This felt like a little volatility today, and lo and behold, we were seeing 12 times that a few weeks ago, which is pretty crazy.
Yeah, a lot of craziness. Let's get to it then with a little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is going on out there. And, it's been another weird one, listeners, to say the least. It's coming on the heels of another weird one in the other direction. Well, direction's kind of hard to parse for today. Yeah, we'll get to that in a bit. But yesterday, of course, the market deciding it didn't like what it was hearing both out of the Fed and out of the White House. I think Trump had the quote of the week when he said 100 trade deals with China wouldn't make up for coronavirus. So kind of clearly cementing where he's laying the blame for all this. Probably a little bit of election year posturing going on there, shifting the blame from the White House over there to China and vice versa. But also, of course, all those folks who were rallying the market a week and change ago on the hopes of a détente with China, that was throwing a little bit of cold water on that. The Fed also saying we might need to take some more drastic measures to really shore things up here. The market not liking that either. So a bit of a 1-2 punch yesterday. Most of the major indices off pretty hard. The Russell 2000 leading the charts, as it always does, it seems like these days, to the downside at least, off 3.3%. NASDAQ and the S&P off over 1.5%. The Dow off over 2% yesterday. And then coming into today, we saw more negative unemployment numbers out there. And it seemed like the markets were feeling the old spookage, to use a colloquial term out there. And then now it seems coming to showtime. Maybe some of that, they're shaking off the rust a little bit because we're actually seeing the S&P and the Dow up on the day. S&P up about almost 0.15%, so kind of the Goldilocks in there. The Dow up over 0.5%, and the NASDAQ off about 0.33%. So I guess it kind of depends where you're looking today out there. We'll get to small cap in a bit on TWIFO, listeners, so stay tuned for that. A lot of interesting stuff. They had a big webinar this week with CME and CBOE, so we'll hear some interesting nuggets and analysis coming out of what the heck's going on in small cap land, which is a lot. And, of course, gold and crude getting a bit of a lift out there. WTI actually threatening a 27 handle out there, 26.90 right now, up 1.6 points. So, spoiler alert, it's going to be at the top of our movers and shakers again for TWIFO every week. It's inescapable crude these days. And gold also north of the 1,700 handle at 1741. Coming to showtime, we saw our old friend the VIX at about a 36.5 or so. That puts it up about 9 handles from where it was this time last show. So, as Andrew 2.0 alluded to, a little bit of vol out there in the space. Also, a little bit of vol. VVIX back up well over 120, back up to about 146, puts it up about 27 handles from where it was this time last show. So, yeah, a little bit of firmness coming in on the vol front. We'll see if that maintains as this market direction plays out. And our old friend VXX, we were just talking about how VXX doesn't like itself a little bit of the contango in the VIX futures on vol views last week, which, of course, is what VXX traders like. They want it to erode. This week, not so much. Not doing that. In fact, getting the old juice back up nearly 7 handles, almost a 41 coming into showtime. So a lot to unpack there. Let's go back around the horn, the opposite of the way we came. Let's start in the land of Mr. Andrew 2.0. Mr. Andrew 2.0, sir, what is lighting up the tape over there in TradeStation land today?
So the top symbols this month are SPY, Tesla, Apple, QQQ, Amazon, Boeing, AMD. We're seeing Netflix, Beyond Meat, and Facebook. What is really odd to me is that a lot of the chips are absent outside of AMD. Normally we see a lot more chip stocks in here, especially when they're showing kind of that unusual quiet strength that they have over the last few weeks. Roku is another one that's oddly been absent. Boeing continues to be on the list. This one's been on the list as it's broken down over the last few weeks. Even though it has broken down recently, it is filling an open gap, so that last open gap below. And I did see a little bit of flow in the June 2022 125 calls. So someone bought 1,000 of those for between 41.30 and 42.25. So on an individual basis, I'm watching which stocks are sort of like the eggs, meaning they crack on any market weakness, and which stocks are the tennis balls, meaning they're the quickest to bounce back on any relief in sort of market pressure. So a few examples of some of the strong names I've been seeing is Netflix, Amazon, AMD, Beyond Meat continues to be very strong. These names have barely budged with the market drop. So everything needs to be taken into context, of course. Like I said earlier, a few months ago, a 10% move in the major indices was starting to feel like a normal sort of occurrence. Now, yesterday's action felt a little bit more pronounced than usual, even though it was a few percent, and we've come a long way. So one thing I saw this morning also that I wanted to point out is that everything sort of held where it needed to so far. We saw deeply, deeply sold levels on the percent Williams R on the SPX this morning. It's basically the max oversold it could be on the daily. So if we begin to break down below this morning's levels, that would certainly be a caution flag.
I like that. Tennis balls and eggs. I may have to purloin that for my own uses, sir. So don't take outrage and umbrage like the Rocklasser does if that just shows up in some other shows here on the network. But I like that. Eggs and tennis balls. Do you have those in your portfolios? Probably want a few more of the latter than the former out there. Let's go back, since he's going to take umbrage anyway. Let's go back to the Rock Lobster. Sir, do you like that analogy of eggs and tennis balls? And then are you planning to steal it as well? And then B, what are your thoughts on what's lighting up your tape out there today, sir?
Yeah, I like, of course, how could I not like somebody called Andrew 2.0 in his analogies? And by definition, of course I would like those analogies.
Or, of course, you could take umbrage that he is usurping you and be angry even more.
Well, he's still relatively new. We're going to wait for that. We're going to wait till we throw the umbrage at him. But
okay. That's fair and reasonable of you, sir, which is unlike you.
You know why? It's because it's springtime. I'm in a good mood. The sun is shining. You know, the Clam Pirates were here this morning and they're gone, so we got that going for us. Very interesting. So a couple things. Back end of vol curve. You know, everything around the election, that weird hump. About as high as it was at the very bottom of the market, within maybe a point or two. So odd. So when Andrew 2.0 was talking about, you know, that inflection we kind of held there, like it feels like the vol got there, that sort of long end vol went like, sky's falling, and then everything stopped. And at least those futures didn't get higher. So I think there's some confirmation from vol on that. So we'll see over the next couple of days. But I think this is a good inflection for vol too as well. Pretty flat curve. There's good cause, right? Because like last week, like Monday, I mean, even Monday this week, we're like, woo, everything's opening up. It's cool. People are going to go back to work. All of a sudden, like the cold water machine came out hard and just threw it on everybody. LA, August, this, no football, like blah, blah, blah. Fauci, crushing everybody. Then Powell came out and like told everybody 40 million people are out of work or whatever. And I guess it sounded worse when the Fed chairman said it in front of Congress than it's just reading it every week, So I think, it was good that we pulled back because none of that news is good. It's not good. So, I know the market is forward thinking or forward looking. I don't know about thinking, but forward looking. So anyway, I think this is an interesting, what I would just call vol inflection. So normally, I trade vol two ways. There's the trending way, and then there's the inflecting way where like sometimes I want to lean really short or really long. And then when I feel like we're in a trend, and there's other when we're kind of at, a flat curve, and we can kind of break either way, and that could go for, the SPX as well. So I'm more positioned on the knife edge type of trade than really trying to be too long or too short. But that's what I see from a vol point of view, and then we just like sit here and wait for the story to unfold. And to be honest, I don't know. I don't know if some states open, some states don't. I think there's a lot of there's uncertainty around it. And that's why VIX is back above 30 when it was trading 26.5 on Monday. I mean, you got to realize vol literally went up, enormous boom. And we're only down 100 SPX, which everybody's like, 100 SPX, but that's really not a lot when you're already in you're already in zone 4. You're in the danger zone already. So it kind of moved actually fairly to the vol. So I think vol went up a lot harder than SPX came down, which just tells you how hair trigger finger the vol traders are. They jacked all that stuff up so darn fast, people's heads spun. And now we're kind of sitting at this level, seeing what happens. So that's what I think we are. It's a pretty hard inflection. And up or down, I'm ambivalent. Don't know what at this point. So that's about all I got from Vol-Land.
It's a good point about the hair trigger on the vol space, because you're right. We're not setting off circuit breakers yet. If you take a first glance at what we saw in the vol space, you might think, perhaps we are retracing some recent near-term lows out here. A good point, too, about the overall economic news out there and what's going on out there as my lights blow out here one by one in my studio, and I'm left bathed in darkness. It's a fun way to do the show, though. Let's see here. Yeah, everyone's has made analogies of these recent developments to, obviously, of course, the 2008 kind of meltdown, and also, of course, way back to the Great Depression. Of course, you're looking at some of the unemployment numbers we're seeing right now. You have to go back that far to see some sort of historical analog. And everyone's looking at this rally now saying we have this great V-shaped recovery. People forget there were steps taken to kind of head that off, the Great Depression, back in October to November of 1929 as well. And that led to about a 6-month rally out there, which kind of fizzled out in early 1930. And we saw some steps out there that are not that dissimilar from what we're seeing right now. We saw a quote-unquote banker's pool committing about $125 million, which was big bucks back then, to actually buy stocks above market prices. They were directly coming in and buying assets in terms of not just the Fed easing in liquidity and buying up treasuries, but actually buying underpriced stocks, as they termed it. They saw the Fed also injecting liquidity as well. Emergency rate cuts. Sounding familiar? Reduction in tax rates across the board, public construction spending. So some analogous steps were taken. I'm not here to point a picture of saying, we're headed for the Great Depression, but all these folks are thinking, this V-shaped recovery means the worst is behind us. We saw something almost exactly similar back in 1929, and we saw exactly how the 30s played out, and no one wants a repeat of that. Just something to bear in mind, and maybe one of the reasons why we're seeing the vol traders with as you termed it, Mr. Rock Lobster, a bit of a hair trigger out there right now, because maybe they're reading this data as well. Mr. Uncle Mike, sir, I can always turn to you last because you'll give us that ray of sunshine, that ray of optimism. What is lighting up your tape out there today, sir?
Well, first off, just to make sure that a correction from earlier, Skippy's Euros is open, just so you know, for takeout.
Yes.
That's something.
That you've already improved my day. I should probably order. I'm not sure if they'll deliver all the way downtown, but I should order just to support them.
You should. But yeah, I think that we have it is very much a hair trigger market. But what's really ironic about what's happening at this stage is that we have been in a 2,800 to 2,900 range for about a month now, approximately, within the S&P 500. We've been very range bound, but it's a 100-point range. So it's a pretty intense range as to where we're going with it. And where this is it's roughly between a 50 and 60% retracement from the downturn from peak to trough of, I'm just looking at SPY right now, of 339 down to 218. And that's about the range with which we are. And the market really doesn't seem to want to show its hand, at least over the course of the last month anyway, as to where we're going with things. What's interesting now is that because of where we're at, there's no doubt that the federal government is playing a big role in keeping the economy alive, so to speak, with a lot of Band-Aids, if you will. And there's no way this can go on forever. And I don't think anybody on either side of the aisle wants it to go on forever from the standpoint of spending. But what's interesting is that a lot of local colleges and local businesses are furloughing employees. And because of the unemployment that exists right now, at least in the state of Illinois, is that if you work, let's say that you earn roughly $50,000 a year. If you get furloughed from your employer, you qualify for unemployment. And Illinois, and this is just in Illinois, so I'm sure every state's different. You can make roughly, I think it comes out to a maximum of $480 a week. And this is assuming you have no kids. You'd make $480 a week. Now, combine the Illinois unemployment with the federal unemployment, the supplemental unemployment from the CARES Act, then people are making almost $1,100 a week on unemployment. And so there's employees out there that if you're making approximately $50,000 a year, you could actually be making more money during the coronavirus than you would be if you were actually working. Now, I'm not trying to say that that's right or wrong. I'm not trying to be political here, but it's kind of like what we're having here. You could almost say that we've had a tech bubble in our history. We've had we've had commodity bubbles, but we almost could be having an unemployment bubble, if that makes any sense, because of the fact that we have so much money that's out there for people that really aren't missing a beat at this stage. I know a gentleman that he lost his job at a local company, and I asked him, I said, "Are you doing okay?" Just trying to be sympathetic to him, and he's like, "Well, as long as I get called back by July 24th, which is when the federal unemployment checks run out, as long as I do that, I'm not feeling any pain at all. I'm actually making a little bit of money from this." So it's kind of interesting that we have that. It's not just for people that aren't working or people. And I'm not trying to say these people are lazy or anything like that. I mean, you do what you got to do, but we have so much of it that it's definitely something that's helping the Skippy zeros of the world, so to speak. Because of the fact that if the gentleman I was just talking about, now I have no clue if he goes to Skippy zeros or not, but if he didn't have these checks, then there's definitely no way he's going to Skippy zeros. But because he has these checks, he can still go to a place like Skippy zeros, and perhaps Skippies can survive throughout all this. Now, in terms of the market itself and how this is affecting it and what's happening with it, just the tale of it's kind of interesting in that initially financials were getting smoked going into today, and then they rebounded pretty nicely for those of us that are holding financials. So we definitely have that's happening in the marketplace today. Markets were awful at the beginning, but buyers have come in. So apparently where the market feels that 2,800 is about where it wants to be right now from a standpoint of price. So with everything that we have happening, add to the mix that my beloved silver is up on 1.5%. So I wish I could say I'm going to adjust the collar, but I'm not. But it is higher at this point. And maybe someday I'll do an adjustment to the collar, and I'll be more than excited to talk about it on the show. But that's what's happening, and that is what's lighting up my tape right now.
I guess I can cancel the 20 minutes I have scheduled for you, sir, to regale us with all of your collar adjustments. Once again, that segment goes to waste. The cool intro I have for it, can't use, wasted money. Uncle Mike, you promised so much with the great 2-year silver collar. Let's see if the market can make up for our disappointment here. Let's see what's trading out here in the broad indices. First, VIX having a rare kind of active day out there. Not surprising. We're seeing vol up. We're seeing the major indices having a hard time kind of deciding what they want to be today, where they want to go. And as a result, a little bit of vol creeping back in and a little bit of volume creeping back in VIX land. VIX was at about 316,000 contracts as of a few minutes ago. If you've been listening to any of our shows, you know the ADV has come off quite a bit. It's right about 330. So VIX is pretty much at its ADV already today, which is a rare occurrence out there these days. VIX has been kind of light from a volume perspective. So something is afoot. I think that's probably analogous to what Mr. Rocklobster was saying earlier about the vol traders having a bit of a hair trigger. They're certainly trading it up today out there. The SPY, at least before we get to the SPY, at about 3.5 million contracts as of a few minutes ago. The ADV is about 4.7 million, so SPY looking fairly heavy as well. Not quite as close to its ADV as VIX is, but still looking pretty good. The S, 724,000 contracts. The ADV, just a little bit north of a million right now. So that ADV has come off pretty much 50%, if not more, from the highs we saw not too long ago. Some of that reflected from the overall volume kind of going away in the space as vol goes back down. Also, some of that still reflected maybe from the lingering effect of the floor still being closed, which is, of course, was the primary marketplace for the S until a few weeks ago. The Qs at about 656,000 contracts, the ADV 782, and the Russell, at least from the IWM variant out here, lighting it up. 733,000 contracts has already blown through its ADV, which is at about an already robust 680,000. So small caps, once again, kind of where the action is. They don't get a lot of love out there. We talk about them on TWIFO quite a bit. And it has been interesting, kind of eye-opening for me to see we always talk about structurally how volatile small caps are compared to large caps, but we're seeing it playing out in stark relief these days. And it has been somewhat eye-opening for me, and I'm judging by your feedback from a lot of you out there as well. Let's move on to the most actives out here from an equity options and individual name perspective. Cost you 168,000 contracts to break into the top 10 today. So that's actually pretty robust. There have been days we've seen it under 100,000 not too long ago. So 168 means it's a pretty active day out there, all things considered. That gets you to Netflix, number 10. Number 9, American Airlines, 205 on the tape. So we're already over 200,000 at number 9. Again, another sign that we're at a pretty strong day. Number 8, Microsoft, good old softy at 222. Number 7, the only chip stock that's popular at TradeStation over the past month, as Mr. Andrew 2.0 alluded to, a.k.a. AMD, closing in on 250,000 contracts. If you want exactly 250,000, you got to go to number 6. That's Uncle Mike's nemesis, a.k.a. Cisco. Number 5, we got Wells Fargo at a tick over 250,000, 251,000 to be precise. Number 4, Tesla, all the way down to number 4. But that gets you over 300,000 now to 301,000. There have been days out here, of course, we don't see the whole list. The number 1 spot isn't over 300,000. So this is a pretty active day. Number 2, our old friends. Once again, neck and neck. I am convinced now that there is symbol confusion between these two, because it's the only reason that the two of them are always next to each other on the top 10. It's our friends across the street, number 3, Boeing, 308,000, and the number 2, Bank of America, at about 375,000. So they're always similar volume. Their tickers are almost identical. Can't be an accident, day in, day out, that we see those. That's a little bit of homework for you there, Andrew 2.0. You can look into your numbers at TradeStation, see if there's some fat finger trading going on between Bank of America and Boeing out there, because options volume-wise, they are neck and neck all the time. Cannot be a coincidence. Number 1, of course, is going to be the fruit company, over 500K, over 500,000 at 530,000. Let's check in really quickly to see how our old friend AAPL is doing right now. They're at about 306, almost 307, down about 75 cents. Oh, how far and distant that 150 put that everyone was debating selling back on the show not too long ago. How distant that seems in the rearview mirror. The stock has effectively doubled and done more, actually, since then. So interesting times are upon us. What's the old Chinese curse? May you live in interesting times. We're all doing that right now. Really quickly before I keep going, we do have a bunch of earnings popping off. I won't mention Uncle Mike's. Actually, I will. I'm sorry, Uncle Mike. I do have to mention your favorite right now, because Cisco is one of the big names popping off this week. They were on Wednesday. Hot off the presses. We have the earnings move results report, so you can find it for yourself. TheOptionsInsider.com. The top name on that report right now, Cisco. Coming into the bell on, let's see, that was yesterday on the 13th when they popped off. They closed at almost $42, $41.95, and they were pricing in about 5.5%. They delivered about 5.2%. So pretty much in line with their earnings straddle out there right now. So not a lot of surprises out there. VVIX, you probably know them, WIX, from seeing all their ads for their web development out there. They're kind of like a rival to Squarespace, it seems like, out there. They were closed at 166.20 going into their announcement. They were there actually today before the bell. So they just popped off today. They were pricing in 8.6%, delivered 6.7%. So we've seen a few names now underperforming from a vol perspective, which is kind of interesting. You guys can see the whole report for yourselves, those and a lot more. Check out the earnings season report as well. I got a bunch of those looking at kind of an interesting earnings season so far. That's all I'm going to say. I'll let you guys check out the report for yourselves as we keep on rolling. It is time to get weird. It is time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Time to get weird, time to get wild. This is usually where I hit the button to let our Eye of Sauron off the chain, but you know what? Our Eye of Sauron gets a little bit of a break whenever Andrew 2.0 is around, because he has his own scanning tools over there at TradeStation that he likes to put to work. Instead, I don't mind. Our Eye of Sauron doesn't mind. Gives us a little bit of a break. Mr. Andrew 2.0, sir, what you got to come up with a name for your cool TradeStation tools out there, but we'll let you mull on that over the weekend. What have your TradeStation tool? What have you found for us today, sir? What's the first name on your victim list, on your hit list?
Well, we do have a name. It's the hot list. I want everyone to check that out as well. But the first one I'm going to give you, I talked about a few weeks ago. This is a dumpster dive. So if you're buying with common, I'd beware. But General Electric, GE, saw 2011 of the August 20th 6 calls come in yesterday as well. The trader behind this is likely trading this on a look below reversal play in terms of price. If you go back and you look at that monthly chart of GE, $5.73 is the low from 2009. So it's a huge level. So far, the stock has shaken below that level and has regained it. Oftentimes, that's what happens. They'll run the stops and then they'll bring it right back up and see if they can gain some ground or gain some traction from here. So we'll see if they can stay out of the bankruptcy conversation. There is a ton of room higher if this can hold this area. So it's a nice looking mean reversion play here. Interesting.
You know, GE has been on our radar quite a bit. It does pop in our top 10 quite a bit. Trading right now, listeners, about $5.70 off about a dime or so out there. It's a name that its problems and travails are well documented. A year ago, was trading about 2x at about right around 1040 or so. Got as high very recently. Another name that peaked perhaps right at the wrong time. It peaked just going into all this madness at right about $13, 13 and a quarter, I think was the high on the year. And that was in mid-February. And we all know what happened after mid-February. It took a clobbering, to quote the thing, right down there on the chin. Got down to as low as, looks like 548 intraday. So not a good look there for GE, and it's then it rebounded quickly up to 812. That was late March, so that was pretty quick. And then it seems like that rebounds a little bit too fast because it has been drifting back down ever since then. Pretty much back down to right about now, which is right about close to the low. So calls love, Mr. Rock Lobster. Some folks looking like some upside. I'm looking right now what's lighting it up out there today, and it seems like we got some June 7 puts lighting it up to the tune of about 2,087 going up right on the bid out there. So someone looks like they're hitting a little bit of, so maybe a little bit of 7 puts. Maybe they're dumping out. Looks like they're probably closing out some 7 puts. Also worth noting, the 7 calls traded a similar amount, but 2 hours earlier, 2,049. Those were in May. So either way, Mr. Rock Lobster, the 7 strike active today. Folks buying the 7 calls in May and selling the 7 puts in June out there, which is interesting. An hour or two apart, so not exactly a spread. What are your thoughts on the call paper Mr. Andrew 2.0 mentioned, as well as just your thoughts on GE in general right now, sir?
You know, I think GE it's an airline play at this point, right? Because they're kind of switched to jet engines and stuff like that. Not that they switched, but I thought they were kind of betting big on the future of airplanes. So right now, I think what they need to bet big on is a way to, zap the coronavirus bug from everybody that wants to fly on the airplanes. It's one of these, GE is one of these weird things where it's kind of been a turnaround story now for 3 years. I assume it will be around, and it's hard for it to get a whole lot cheaper than this. I think the company survives. I think the world wants to fly, and it's just a question of holding on. I don't think the stock has, to me, it's kind of more of a put sale type of gain. I do like the idea of the risk reversal type of trade here, but I would buy I would kind of write short-term puts and then buy longer-term calls, to be honest, because the stock is so cheap. And just, you just keep rolling the short-term puts anyway. You don't think much is going to happen. And then try to make the big dough on long-term calls if we actually get any kind of breakout by the end of the year, when things, if I don't know, whatever normal is going to be. But I assume if people start flying again, that'll be good for GE.
Like someone did the opposite today. They sold longer-term puts, and they bought shorter-term calls. So not listening to you at all, Mr. Rock Lobster, which I think is the moral of the story for all of us out here. Mr. Andrew 2.0, sir, that was an interesting one. What else you have up your sleeve, sir, in the creatively named hot list over there at TradeStation?
Okay, so the first one I gave you was negatively impacted by coronavirus. This one has been, I think, positively impacted by the coronavirus, and that's Grubhub, Grub. This one obviously all over the news yesterday with rumors of a potential offer from Uber. So that one saw a bunch of sellers of puts at the September and December 60 strikes. So those players could be looking for an eventual deal somewhere in that range. You would think that regardless of the deal, business has definitely picked up for companies like a Grubhub, for example.
Put sellers on the 60 strike. Interesting. That's kind of aggressive. That's maybe more aggressive than we see traditionally in names like this. This is, of course, a short sale restricted name right now. They're trading $55 right now, so $5 shy of that 60 handle out there. It's a name that's kind of had interesting year as well. A year ago, it was trading 62.5, got up to about 70, about 80 actually, looks like, in the blush of last summer. Then they kind of sold off. Looks like earnings hit them hard. And they sold off down to about 59 and change. And then in October, they fell off a cliff down to 33. So it looks like maybe a bad report out there for them in October. Then they fought their way back. By January, they had pretty much climbed all the way back to about 57 again. So they were looking pretty good, hovering around that level, a little bit lower than that, low 50s by the time March came around. Then we all know what happened. Bam. And they dropped down to about 29 and a third or so. And now have back pretty much almost doubled from there again, up to 55 again, because Grubhub, pretty much the only restaurant in town right now, just like Peloton, the only gym in town. So it's worked out pretty good for them. And now, of course, this deal, which is a weird one, because Uber, what do they really have to trade with? Their stock, a lot of cash. It's a bit of a weird one for Uber to be making this acquisition. But I guess maybe that's a tacit acknowledgement that Uber Eats, maybe not lighting it up. If you tried Uber Eats, I've used it a few times. Not exactly the cheapest way to get food to your house. Let's just put it that way. A lot of mystery fees jumping in there. And all of a sudden, next thing you know, the thing you buy all the time down the street is now cost 2x to get it to your house, which is interesting. But that's before the pandemic hit. I haven't even tried their fees now. Must be atrocious. Really quickly right now, let's look at what's lighting it up out there today. Looks like people are fading, actually. The upside, 61.5 calls were being sold about 500 times. Not a huge paper out there today, and someone buying the 50 puts about 500 times. Mr. Rock Lobster, what are your thoughts on Grubhub? And folks, as Andrew 2.0 mentioned, they're selling a lot of 60 puts out there, which right now are pretty beefy, sir.
Aggressive, considering the jump from the low 40s, don't you think? That's getting on board the train pretty hard. I think this is kind of and I got a bunch of flack from this before, but that was 5-6 weeks ago about selling puts in this market. You have to pick my rule hasn't changed, and I've been doing the same thing. You have to pick a ridiculous price and sell the puts. If you sell them at the money, you might be in for a little bit more pain.
Watch out when you start talking about put selling, Mr. Rock Lobster. The hate flies fast and furious at you.
Which, by the way, it looks pretty darn good, by the way, but I'll let that slide. But anyway, like the 60 level that's a rough level, for this thing. So, I mean, it's kind of selling sort of the toppy, selling puts at the top. It's not my favorite trade at all. And of course, as an ex-market maker, you know what that's like. It generally leads to great unhappiness. So I would just call that bold. I will give that a bold at 9 out of 10. That's bold 8 out of 10 bold.
I like that. It leads to great unhappiness. One of the better Rock Lobster euphemisms out there. But yeah, they're not messing around. At this point, they're definitely picking up themselves some stock and probably wearing it a little bit as well. Again, this deal not a done deal, so we could see more movement as a result. But 60 strike. Yeah, that would not be my go-to MO right now. Mr. Andrew 2.0, so far 2 for 2. Let's see what you got up your quiver there, up your arsenal for the third and final name here on the odd block today, sir.
Okay, and this is the one I'm going to mention now was not in our top traded list, but I think it's one that people should be looking at. It's NVDA. That saw 261 of the May 325 calls come in for about 169. So NVIDIA has obviously shown a ton of relative strength. It's been an absolute monster right back up to the highs. Right now, it's reverting back to that 10-day exponential moving average. A lot of air since it last visited that, which I tend to look at as good risk reward. Earnings are coming up on the 21st. So the person who's playing this is likely looking for sort of a pre-earnings run, which a lot of these growth stocks tend to do into earnings.
NVIDIA was a frequent offender for us for a while there, particularly when the crypto folks were flocking into it, and it had become this surrogate, this canary in the coal mine for what was happening in the crypto space. All the miners were obviously gobbling up video cards as fast as they can get them, buying massive bundles. That's slowed off a little bit right now. Of course, the halving has turned a little bit of interest back towards Bitcoin these days. Check out our Crypto Rundown if you haven't already, listeners. It follows this program on Monday, so if you listen live, you can check out Crypto Rundown after that. NVIDIA right now trading about 314.5, up about 3.25, so a decent day for NVIDIA, up about 1%. A year ago, they were trading well shy of that, about half of it. 164 was where they were a year ago, and it's been pretty much a long upward trajectory, except for a little bit of a blip of late. They hit almost exactly where they are right now back in the middle of February. Hit 314.70, and then that was on February 19th. Then they sold off hard right after that. Got down to looks like about 202. Actually, it seemed like that was the low. Actually, no, I picked that back. 196.5 or so out there. That was on March 16th. And then they pretty much haven't looked back since then. They've gained over 100 handles since that level out there, which is interesting. Gets back into the argument whether this is overdone or not, but they're feeling the love again today. 314.38. Looking at the trades out there today, mostly small stuff. 300 lots of the Jan 2021. 300 puts going up. So these are slightly out of the money. It's like paper selling those. And also seeing 300 lots. Is this a spread? No, they're about an hour apart. We're also seeing a 320 lot of the, looks like someone rolling from June 335s to the June 26th 335, so getting out a little bit extra, doing that 320 times 2. So looks like folks are liking themselves some upside. It sounds like that's in keeping with what Mr. Andrew 2.0 was just saying, Mr. Rocklop. So what are your thoughts here on a little bit of upside love in NVIDIA?
That pre-earnings play is one of my favorites, so I'm going to say, yeah, you know what? I like this one. Just riding the deltas into earnings. A lot of these growth stocks. I mean, it's like Ophir has made a lot of hay with a lot of this back testing on this stuff. It works. I mean, it's basically, except for this coronavirus thing, we were in kind of a bull market, and the fans definitely get all loaded up prior to earnings on these things. So it seems I prefer to play to the earnings and not through the earnings. So that's, the vol doesn't go down prior to earnings. That's the good part. So you have a vol floor. But so I would say, yeah, of all the trades, I think this looks like the best odds on one. I like the GE wasn't bad. I just don't like buying short-term calls in it. But as far as NVIDIA goes, this is the pre-earnings long call thing. I think NVIDIA has done very well too historically.
They have done very well. And Mr. Andrew 2.0, I should say, did pretty well as well. Our Eye of Sauron might want to look out, maybe out of a job. As we keep on rolling, it's Thursday. It's time for you guys to take the reins. It is time for the mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Let's see what you guys have on the brain. First off, let's pay off the question we asked you guys last week, which you guys are looking pretty prescient right now. Again, the worm could turn at any moment, but right now, we asked you guys last week, and it finished off, I think, at the beginning of this week. The S&P had just crossed 2,900 at the time, so we thought we would re-ask a question we had asked you a month earlier when the S&P first crossed 2,600, and you guys faded it pretty hard. We said, how are you feeling right now? S&P 2,900 a month from now, yay or nay, higher or lower, maybe right around here? Or are you saying I'm getting to cash, getting the heck out of Dodge? And 43.1% of you, a lower percentage. Last time it was around 2/3. This time it's 43%. We're still fading. So fading still won, but 43.1%, a lower percentage fading at this time. And then we got 26.5% or so right saying higher, so feeling the love. About 17.6% saying around this level. So interesting stuff there when you get out there. So right a little north of 40% saying at 2,900 or above. And, of course, 43% saying below. And then about 13%, which is a higher percentage as well, saying I'm in cash, which, again, it's hard to argue with that as well because we have seen quite a run-up of late. Maybe you want to take some of that off the table in case these recent shocks to the system prove to be a little bit more catastrophic than they seem at first blush. Before we get into our questions, really quickly, Mr. Andrew 2.0, any compelling listener questions coming across your tape, or I should say client questions, hopefully there are listeners as well, over there at TradeStation these days, sir?
One person asked, what is one option strategy like? As the other Andrew, the Rock Lobster, mentioned the pre-earnings play. So I'll go over kind of how I look at that. I have basically a simple strategy that has been one of my bread and butter trades over the years, the earnings run-up. What I'll do is I'll take a stock that is setting up in a technical pattern, most often sort of like a bull flag, a daily bull flag or a weekly bull flag. A week or two before earnings, I'll purchase some out-of-the-money calls. And what I've found is a lot of these growth stocks with nice liquidity, big earnings, big sales that are showing a lot of relative strength. What I found is a lot of those popular growth names will tend to run into the print and the vol tends to spike just prior to it. So when it works successfully, the strategy allows you to peel off a good chunk prior to the actual print. Sometimes I'll take it all off prior to the print, and then you can kind of try and play the earnings with the house's money or not at all if it worked that well. So what I like about the strategy, you're using a catalyst to your advantage. So your options likely aren't going to decay if you're doing it right, and that's one of my bread and butter strategies.
Well, let's see what else our listeners have on the brain here. This is a frequent listener, Options Game. He usually chimes in on TWIFO. But he's got an interesting one here for us here on the show. He says, what happens to options prices with negative interest rates? An interesting one out here. You know, it's not a scenario we think about too often because it's not one that really occurs too often. Of course, everyone's got negative on the brain as of the recent WTI foray to the dark side of late. It's got everyone thinking, what else can go negative? CFTC just warning WTI could do that again. Don't get too cocky out there. We'll talk about that more on TWIFO in a little bit. But, let's go out to the uncle list of mics right now. Mr. Uncle Mike, sir, an interesting question here from Options Game. I would like to get your thoughts on it because you like yourself harvesting a little bit of the old risk premium, getting a little bit of income for your clients. Options Game wants to know what happens to option prices with negative interest rates, sir.
I really don't know. Because let's think about this. So let's dig deep into ROW for right now. And so with that, with ROW, we would actually have to have, because so that would mean you're technically getting paid to borrow money. And so if you're getting paid to borrow money, then you're almost better off buying the stock on margin because you're in theory getting paid to borrow it. So I got to be honest with you, Mark, this one's above my comprehension because I've just never even thought of that because of the inverse relationships of ROW. So in terms of option pricing with negative rates, I do think it would be an increase in the marketplace. But in terms of like how we would react within a vacuum with how ROW would react to that, I understand like the relationships with ROW to the underlying and that, or with ROW to the option. But I just think that it does not compute in my head. I really don't know what would actually happen. I can't lie.
Mr. Rock Lobster, I see you going crazy in our show chat with your favorite mantra of juice for free. Juice for free. Which, of course, is one day will be the title of your forthcoming book, How to Get You Juice for Free with the Rock Lobster. So, Mr. Rock Lobster, what do you have to say here for Options Game? And pretty much everyone else who's probably mulling this, we have heard rumors of the Fed is contemplating a move to negative rates. How do you think this will impact options, sir?
Well, usually, rates going up mean call prices go up and puts go down, right? That's just the model part for option prices. The reality is, what rates are they going to actually put into the model to use? I think that's the big question. So, realistically, future going out, those call values are going to go down. They're going to get a little cheaper. Put value should go up because I think we're pretty close to zero. I'm just trying to think. I just, even though interest rates might be zero, I just do not see any broker dealer just giving money away to people buying stock. I just don't see that happening. I don't see the broker call rate going to zero, below zero. I don't see any of that stuff going to zero no matter what. They're still going to charge people because that's their job. I think we're just at the point where rates at zero. It'll depend what we actually stick in the model and what we're being charged. So, you just go with Black-Scholes. It's a positive number. I don't think there's a problem in the model sticking a negative number in, because when you have a hard to borrow, you essentially have you put that in as a negative dividend essentially. So with the model, you can put stuff in there to generate a value to tweak things around, because if you have a big funky negative carry cost on a hard to borrow, why wouldn't you be able to put in a negative interest cost for just for vanilla, just because rates are negative. So I think we already use that anyway. So all it does is you just for the listeners. Ultimately, it just has to adjust the roll value, the cost of carry value, and move it in a direction based on the rate cost. So, when you move on a hard to borrow, that pushes, when you put in a negative rate, it pushes the underlying cost way down on a roll. So if the stock is trading at a $50 and it's very hard to borrow, it's going to generate a much lower underlying cost. So all the reversal conversions really get whacked out of line, and calls get real cheap and puts get real expensive. So the stock, you can buy the stock using options extremely, inexpensively, basically, $2, $3, whatever, under the current market price. So I don't see how that would change a whole lot. And these would be kind of tiny rates, really, really tiny ones relative to some of the hard to borrows. That could be like 100% a year or something like that, where you just have massive borrow numbers. So I think precedent for that is already in the pricing. So we just would see how it rolls. But still, anyway, it would be a tiny number. I don't even think it would be big enough, and an option expiring probably within 9 months to really be enough to move the needle on the bid offer. Maybe leaps and stuff like that, you can see a little bit of move, but overall, I'm going to say not a big effect. And I would be surprised if they went below zero, to be honest, if they started to generate a rate like that.
Look at you bursting everyone's bubbles, thinking they're going to get nice checks from their brokers on all their margins. Mr. Rock Lobster, just bursting bubbles left and right here, as we expect from our resident cynic. Well, let's be nice. Let's squeeze in one more here from the listeners. We'll go a little long maybe today. This comes from Glover. Glover wants to know, what do you guys think of JET? I think he means Jets here, which is and it's not an ETF that I watch, quite frankly. This is tracks, as the name implies, tracks the airline space. It's been making some headlines of late, of course, the airline sector and related names like our friends across the street. They're not looking too good of late. Boeing come out recently, their CEO saying they expect at least one airline to go under as a result of all of this. So Jets tracks this. They closed at an all-time low recently of 12.15, and that's the lowest close of all time. Intraday low is 11.25. That's from the madness of March. And right now we're threatening that. We're already below that close. We're at about 12 even right now, off of 15 cents. But Glover, this is not a name I watch very often, so I don't know much about its holdings, how it constructs its portfolio, what allotment it gives. Is it market weighted? Is it just picking the top airlines? It's not a name I really watch. So, Mr. Andrew 2.0, sir, is this a name that's on your radar at all? And if so, maybe what are the folks at TradeStation up to? And what are your thoughts here for Glover about Jets? Just crossed it, 11.98 now, just hitting effectively all-time lows, sir.
Yeah, so this one is not one that I trade often. I'm aware of the symbol. I'm not sure I would go with an ETF if I was looking to play this space. I'm getting all the dumpster dives today, but one interesting thing, it does have a nice daily hammer, but on something like this, I would like to see some sort of rotation, at least on a weekly time frame, just to give me a little more confidence so I'm not catching a falling knife. Weekly and monthly rotation would definitely be my preference. Sentiment probably can't get any worse on something like this, so I would be open to trading some airlines or something like Boeing if I saw that price confirmation. But the key is you have to see that price confirmation first, because these airlines and stocks like GE have been falling for months and months and months. So I don't think I'm smart enough to just pick the bottom in something like this.
Yeah, I'm leery as well of saying, hey, dive into an ETF. I don't know how this thing is constructed, what sort of due diligence they do. If one of their core holdings goes under, how does that impact the ETF? Is it going to go the way of the dodo? These are questions we need to have answered. So this is not one I watch a lot. I don't know how they rebalance, how they adjust. Is it daily, quarterly, monthly, what the deal is out there. So I'm not going to recommend it. But if you're interested in it, listeners, again, I think there's better ways. If you want to play it, play directly. You could construct, I'm sure, what they do yourselves, is having a basket of a handful of airline names, if you were so inclined, rather than having someone else out there do that for you with perhaps dubious construction. Again, I'm not that, don't watch it that often, so it's not my first go-to. But an interesting question nonetheless. As we keep on rolling to our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
And you know what? He answered so many of your questions that we're coming up against it. So we're going to do a combo, listeners, of Around the Block, what we're watching, as well as what we have cooking that may interest you. Let's start back in the Trade Station hot seat, Mr. Andrew 2.0, sir. What are you watching for the rest of this week into the weekend, at least until we can all gather here together on the show on Monday? And also, if folks are intrigued, they want to check out the hot list for themselves and the other features you mentioned over there in Trade Station land, where should they go? What should they do, sir?
Sure. So, Mark, first I want to start with this week. This week was a little bit funky, but I want people to remember that we did have options expiration, which can always lead to some trickery in terms of volatility and price movement. We got pinning action and gamma explosion. So that was this week. Going forward, I think from a macro perspective, the market now has all eyes on U.S.-China relations again. In my view, that's going to be bigger for the market than coronavirus. Coronavirus, of course, it's sad with all the deaths and everything, but the U.S.-China relations will likely have a larger impact, in my opinion, on the market. So those are kind of the main things today, where we held where we had to. If you look at the Qs, we had that gap fill reversal off the 21-day. I think a lot of people were expecting a pullback of some sort. The question is, how deep do we go? So we'll have to see how the VIX acts coming up against that 50-day moving average. I would say the key thing, as always for me and for most traders, at least technical traders, is to keep an open mind. Have your strategy before the market opens, have your price triggers in place so that you can react rather than predict the market. But if you guys are interested in the hot lists, which are what I use to get that options data, or interested in setting up an account with TradeStation, we do offer education for all levels. I would visit tradestation.com/optionsinsider. That's tradestation.com/optionsinsider. Thanks, Mark.
There you go. Check out that link. Even if you navigate other places on the site after you go there, start your journey there. That way, TradeStation knows you're coming from this show, and they could see if you want to check out the blog or anything else like that. Start at tradestation.com/optionsinsider. If you like what they're talking about, they got some cash coming your way too as well. tradestation.com/optionsinsider, the place to go. And last but not least, well, I shouldn't say last because he's in the middle, Mr. Rock Lobster, sir, what is on your radar and what is coming up in the land of the pit?
I concur with 2.0 on the China thing. It still manages to move the needle 2.5 years later. And also just looking at, how many days we're going to have VIX up out of 36, and the SPX is down less than 0.1%. So Looking at vol, still waiting for something funky to happen. And again, wait and see game. So knife edge for vol. Just looking for either a move to 40 or back into the 20s by, I'm going to say either tomorrow or Monday. A little bold, but there we go.
There you go. And then check out optionpit.com for all the fun stuff they have cooking over there. Webinars, a vol trading club. Maybe get yourself a sweet MAGA or F-MAGA hat. Not the MAGA you're thinking of over there. And last but not least, Mr. Uncle Mike, sir, what are you watching for the rest of this week into the weekend? And also, if folks are intrigued, they want a little bit of hand-holding in these markets, where should they go? What should they do?
Well, in addition to what the Andrews had said, I'm watching the 2,800 level and just seeing if we can continue to stay around between 2,800 and 2,900 to see if this channeling continues. Curious to see with that. And if you are looking for an advisor who is not afraid of the word row or negative interest rates for that matter, go to stcharleswealth.com, and I'm more than happy to have a conversation with anybody.
There you go. stcharleswealth.com is the place to begin your journey. So again, that's stcharleswealth.com for Uncle Mike, optionpit.com for the rockingest of lobsters, and tradestation.com/options insider, the place to go to begin your journey over there in TradeStation land. On behalf of Andrew 2.0 and our friends over there at TradeStation, as well as the rockingest of lobsters, throw the meatball in there too, what the heck, even though he is going to Texas, and Uncle Mike, and indeed myself. I want to thank all of you for downloading, streaming, subscribing, for listening live. If you're listening live, stay tuned. We'll be back in about exactly half an hour, actually about 25 minutes now, to talk all things TWIFO. In the meantime, we'll pump some fun stuff in there in the live chat. We've been doing more live streaming for you of late, so hopefully you guys are liking that. Seems like you are. And then we'll see you back in a little bit for TWIFO, and then we'll be back again tomorrow, 1 p.m. Central, 2 p.m. Eastern for vol views, and we do it all again on Monday for more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/options insider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.